and welcome to Fun with Itzy. We are still in Chapter 1, which is Review of Grade 11, and this is going to be Chapter 1, Video 3. We are going to be focusing on business transactions via transaction analysis sheets. Okay, so what we're going to do is we're going to walk through a few transactions here using this company. Mark Doucette is the owner, and he decides to open a computer programming service. This is the first transaction, transaction number 1. On September 1st, he invests $15,000 cash in the business, which he names SoftBite. Do you remember the transaction analysis sheets we used? Well, at the top here, this is the transaction number going down the side. We have our asset accounts, cash, supplies, and equipment. We have our liabilities, which is just one, accounts payable. And so far, we just have one owner's equity account, capital. Okay, and if you look here, assets still equals liabilities plus owner's equity. In this particular transaction, remember from our last video, when the owner invests, owner's equity goes up. So it went up $15,000 here because the owner put in $15,000. And likewise, cash went up. And do you remember from grade 11, every transaction must affect at least two accounts, and the left side must always equal the right side. So here our left side went up by $15,000, and our right side of our transaction went up by $15,000. So this is left, and this one is right. Transaction number 2, SoftBite purchases computer equipment for $7,000. So here we have the first transaction is still here that we just did. Now we're on the second line here, transaction 2. Now we purchased equipment for cash, so our cash went down $7,000, which is why we have the brackets around. Remember, the brackets represent a negative, or sometimes we put minus signs in front, but if you see brackets around a number, it means it's a negative number. And as a result, our equipment went up $7,000. So again, here is the left and right side of our equation, left and right. And here it went down 7 on the left, and it also went up 7. So there was actually a net no change to the left, and as a result, no change to the right. Transaction number 3, SoftBite purchases computer paper and supplies, which are expected to last several months, from Chua Supply Company for $16,000 on account. Now remember, when we say on account, that means cash did not transfer hands and it's going to be paid back later. So we, as SoftBite, purchased the supplies. So supplies goes up in this case. There they are going up. And therefore we owe money. So now we have a liability and our liability goes up. We owe the money now. So the left side went up and the right side of our equation went up. $16,000. Remember, this is the left and this is the right. So therefore our fundamental accounting equation, assets equals liabilities plus owner's equity, still stays in balance. Transaction number 4, SoftBite receives $1,200 cash from customers for programming services. So now our cash went up, this is a positive number here, and our owner's equity is going to go up. And in particular, this is a revenue account, we're going to call it service revenue. And our left side equals our right side. Our left side went up and our right side went up $1,200. Now, what I didn't mention so far was each time we're taking a balance on these transaction analysis sheets. So let me just quickly show you how to do that. So far we had $8,000 in cash, and our cash just went up $1,200. So now we have a balance of $9,200 in cash. Supplies had no change here. There was $0 affecting it this particular transaction. And so it remains at 16. 7,000 plus 0 is 7,000. 1,600 plus 0 is 1,600. And 15,000 plus 1,200 equals 16,200. So that's what we're doing. We're just getting a balance each time. Now, transaction number 5, SoftBite received a bill for $250 for advertising its business, but pays the bill later. Okay? So we owe money, which now you can see here, we owe $250, so our accounts payable went up. But this was an expense, advertising expense. And if you recall, expenses decrease owner's equity, so which is why we have the brackets around it here. So if you look at the left and right again, the left side of our equation, there was no change. And on the right side of our equation, it went up $250 here, and it went down $250. So the right side nets out, again, to no change. 250 up and 250 down is really zero. However, there were a change in the particular accounts payable and capital. So the accounts were changing, but our left and right still remain in balance. No change on the left and no net change on the right. Transaction number 6, SoftBite provides programming services of $3,500 for customers, and we receive $1,500 of cash with the rest due on account. Okay, so what we do know for sure, this is what I always say, what do we know for sure? Well, our cash went up $1,500 and our service revenue went up $3,500. Okay, so here's our cash going up $1,500 that we knew for sure, and we also knew for sure our revenue went up by $3,500. And that, if we just left it at that, our left side would not equal our right side. So we know there's something else happening here. They still owe us $2,000 on account. So that's accounts receivable, and we're going to put that right here. So if you look at the left compared to the right, 1,500 plus 2,000 equals 3,500 on the left, going up. And on the right, here it is, 3,500, and it's going up, so we still balance. Transaction number 7, expenses paid in cash for September are store rent for $600, salaries of employees for $900, and utilities $200. So these are all expenses which we know are owner's equity accounts, and expenses make owner's equity go down. We did pay in cash, so let's take a look at that. So our cash went down the whole amount. So if you add it all up, it's going to be $1,700 if you add that all up together. And we're going to list them each individually because each expense is a separate account. Rent expense, salaries expense, and utilities expense. So if you look at it, the left and the right, well, in this particular case, the left went up 17, and the right went up 17. Okay, number 8, we paid the bill. Remember we got the bill a few transactions ago for advertising at $250? Well, now we're actually paying the cash, so we know our cash is going down, and this time, even though this was an advertising expense before, it's not now because we recorded it as an expense in the last transaction. So our cash is going down here, and our accounts payable is going down because we're paying money back that we owed. So if you look at the left and the right, here's the left, here's the right. Left went down $250 and right went down $250. Remember, we recorded the expense in the first transaction, so we don't record it here. Transaction number 9, the sum of $600 in cash is received. Again, I always say, what do we know for sure? Well, we know cash went up $600. From where? From customers who had previously been billed. Okay, in transaction 6, so somebody owed us money. So our accounts receivable is going to go down because they've now paid us back. So cash goes up and accounts receivable goes down. These are both assets on the left-hand side of the equation. Remember our left and right? Well, there's no net change on the left, and there's no change on the right. So our left still equals our right. And 2 accounts have been affected. Remember, ask yourself, have you affected 2 or more accounts in each transaction? If you can answer yes to that question, you're in good shape. Okay, Mark Doucette withdraws $1,300 in cash from the business for his personal use. Okay, cash goes down, we know for sure. And this is drawings, remember? And remember, drawings is an owner's equity account, and it makes owner's equity go down. So here, there's our cash leaving the company. Even though the owner is getting the cash, this cash account is really for the company. Got to remember that we're doing the accounting for the company, not the owner. Okay, so the company's cash went down, and the owner's drawings has decreased owner's equity, so owner's equity has gone down. Now, if you look at that, it's the left and the right side of our equation. Assets equals liabilities, owner's equity. The left side has gone down $1,300, and the right has gone down $1,300, so we still balance. Okay, so that was 10 transactions. We're going to practice this in class tomorrow, but by now you should be able to determine all accounts that are affected in a transaction. You should be able to record transactions on a transaction analysis sheet, and we're going to practice this. Thanks for watching. Hope this video helped, and we'll talk to you soon.